What's up, everyone? All right, so in today's episode, I'm going to give you my watch list for Monday morning, the game plan for the week ahead, and we're going to do a little post-mortem of what went wrong on Friday, because Friday really was a disaster for me. I mean, all things considered, it could have been a lot worse, but it was a really difficult day, and I feel like it was probably my worst day of the year, at least in terms of sort of emotional control and just letting myself get too sucked into this one stock and unable to pull myself away. And the result was giving back way too much profit. So we've got to learn some lessons from these mistakes. This is the thing. If trading were easy, everyone would do it. It is hard. And even traders who have been doing it for a long time still, from time to time, fall victim to these emotions, and I'm no exception. So if we jump onto the screen share, you can see MLGO here from Friday. Obviously, this ended up going all the way up to 12. And you know what's pretty incredible? I saw people who traded it both long and short and lost both sides. So, this was very, very difficult price action. I don't know why it was so difficult. We could attribute some of that to it being a Chinese stock, and some of these Chinese stocks have been kind of just really difficult, weird price action. Maybe, they kind of ramp up. You have this squeeze, and then all of a sudden some insiders dump shares. We don't know, but some of these dramatic sell-offs are just so bad. You think it's going to pull away, and then it gives it all back in 2 candles. You go short, and the next thing you know, it's rallying back up. So it was difficult to trade, and the writing was on the wall early, and I got stubborn. I really did. I got stubborn. I got frustrated, and I wish I'd walked away earlier. So some of you guys said, Ross, surely after you did your recap, when it was at whatever, $6 a share, you saw that it squeezed all the way up here. You must have gotten back in. And I'll tell you what, I did. But you want to know what happened? I think you can guess. I got back in right here for this squeeze higher. I took profit right here, and I got back in right here. Uh-oh, not good. Now, fortunately, the loss was manageable. I finished the day. Let me show you my calendar. So I ended up coming down to about $1,300 of profit on the day. It was just so stupid. It was so stupid. And at that point, I was like, at that point, I nearly averted disaster. I was ready to flip my table. I was like, this keyboard, well, it's broken anyway, so it doesn't matter. But I was, I don't dare break anything that actually is still working. So this broken keyboard, that's out the window. This old laptop, that's out the window. I was just so furious, and we've all been there. So yeah, was it a setback for me? It was. It was probably one of the most difficult days of the year. And it was unfortunate because it started off, I was up $18,000 on the day before losing like 16 grand on MLGO. It's just sometimes hard to accept accept defeat. And I had a hard time accepting defeat. So what does that mean for Monday morning? Well, on the one hand, when you have a bad day, it's going to make you kind of think, all right, I got to be a bit more conservative here now going into Monday. I just had a really close call. On the other hand, we just had stock that went up 700%. Clearly there's some momentum in the market. There's clearly some FOMO in the market. Is that going to carry over to Monday? Well, I don't know. I think it probably will. So do I just chalk up yesterday, Friday, and I'm recording this on Saturday, so you guys will watch it on Sunday and Monday probably, but, do I just chalk up what happened there to, that was a me issue, not the market issue? Well, I don't know, because I saw a lot of other people struggle with it too. So what was it about MLGO that made that stock so difficult? Is there a way we could have known sooner that this one would give us a hard time? I think the first thing is typically the stocks that I usually do really well on are day one of the move. So basically, like news comes out and it starts squeezing. Day one is usually when I do the best. So already MLGO was day 2. It was continuation. All right. But even worse, it had made this sort of parabolic move up to 440 and then given it all back. And so coming into the open, it was not looking good. In fact, it had a couple of sort of nasty rejections pretty early on. Now, this was at 350, which is where I took my first loss on it. And obviously, it went up to 4, and then it went up to 440. But if you were watching the level 2, you're watching the price action, you're probably able to tell that it felt like there were some big players kind of playing games. Big buy orders, massive sell orders, and then huge market orders going through, flushing the bid, taking it out, and then, sort of clearing the ask. So sometimes when there's, big players in who are sort of controlling things a little bit behind the scenes, and that can happen with some of these Chinese stocks, it's better to sit on the sidelines. And so I think that the writing was on the wall, but I haven't faced a stock that was this difficult in a while, and so I wasn't really on guard for it, and so I made some mistakes. So I think that we probably should be thoughtful about Chinese stocks. But on the other hand, who lost more on this? Would it be long bias traders or short bias traders? I think there are some long bias traders, and I saw a number of them in the chat room and in comments on YouTube who actually did quite well on this. Maybe some have more of a buy and hold strategy. I'm going to buy, I'm just going to, set my stop and let it work. And next thing you know, it's up $3 a share. Now, shorts adding and adding and adding and adding as it goes higher, it went up 700%. So I think in total, the people who lost more on it are the shorts. It still closed up almost 500%. So I think it's going to make shorts a bit more cautious to get in front of a moving train next week. Certainly if it's Chinese, certainly if it's got a float of less than 10 million shares, and certainly if it's in this price range. So now let's jump on the whiteboard and start thinking about what we should be looking for. So now, by the way, I'll just create sort of the profile. So profile right now, let's change the pen. I'm still thinking price between 2 and 10. Focus right now more between 3 and 8. That's kind of the area where we've had sort of the bigger moves. Percentage should be within top 3 gainers in the entire market. And the reason this is important is because if it's one of the top 3 gainers, a lot of traders are going to have their eyes on it. So, you pull up Robinhood app on your phone, or you pull up any app, and a lot of these apps are going to give notifications of the leading gainers. I just uploaded an episode earlier today on Saturday, which you might want to check out. Retail trading hits highs. So in this episode, I talk about an article that I read that cited JP Morgan Chase, this analysis of market data that showed that Robinhood, Charles Schwab, and E-Trade, those 3 brokers right now are contributing nearly 25% of the total volume in the market, just those 3 retail brokers. And that made me think, wow, if you add up Fidelity, Interactive Brokers, Webull, all the other commission-free brokers, and then you add up all the direct access brokers that big money traders are using, I'm now thinking, is it possible that retail trading volume is approaching 40%, maybe 50%? That's a really big deal. So what we know is that right now, the percentage of volume generated by retail trading just from these 3 brokers is the highest it's been since December of 2020. That's the only time it was ever higher, and that was right before the GameStop short squeeze. So, we're right here basically at nearly all-time highs of the percentage of retail trading volume in the market. And that checks out because, look at the volume. Let's just look at how many shares were traded on MLGO on Friday. 530 million shares. 530 million shares. That's like, at $5 a share, it's $2.5 billion of equity that was changing hands. $2.5 billion of capital. Holy smokes, that's a lot of money. So there really is a surge in interest in retail traders in the market. And naturally, retail traders are going to gravitate towards stocks that are making big moves. You have a stock lower on the scan, OVID. So if someone says, hey, Ross, what do you think OVID is going to do? I'm going to tell you, listen, no one's looking at this stock. It's got a 52 million share float, 62 cents a share. It's only up 8%. No one's watching it. What are the stocks people are watching? They're going to be the leading percentage gainers. So if we sort this by volume, typically, look at this. The highest volume stocks are all up quite a lot. Now, occasionally you'll have something that's sort of an anomaly that is a little outside that, but generally the volume and the leading gainers are going to be side by side. BOXL, this was a little lighter volume. Move started kind of later into the day. I was wondering on Friday if we were going to see any sympathy momentum on MLGO, but because of the way it sort of rolled over here into the close, I think that kind of killed any sympathy during that time of the day. Okay, so all that is to say, there are a lot of traders in the market right now, and a lot of traders each morning sitting on the sidelines waiting for a stock that is obvious. So now, the top 3 leading percentage gainers have more eyes on them. So when one of the top 3 leading percentage gainers is priced between 2 and 10, has relative volume 5 times higher, has a news headline, and has a float of certainly under 10 million shares, but when they're as low as 5 million or 2 million or even lower, that's when we're seeing massive imbalances between supply and demand. So this is the profile that we're using, and this is what essentially I'm looking for each morning. So my watch list for Monday morning is really more about which stock is on the scanner that most closely fits this profile right here. Now, by the way, those of you guys who want to watch over my shoulder this week, I'll put the link for the 2-week trial. It's a pro preview. So it gives you 2 weeks of being basically a Warrior Pro member. You get to see what it's like. You'll have access to my charts, my scanners, the live audio video broadcast, the chat room, and a selection of classes from the Warrior Pro curriculum. So you can learn a little bit about my strategy as you're doing this 2-week trial. It's $20. That, in all honesty, the reason we don't give this trial away for free is because it costs us money because we have to provide for your market data. And it actually costs us more than $20 per person to do these trials. However, I know that a lot of you guys who do this trial, you'll get in the door and you'll realize, wow, this is an awesome community. I love Warrior Trading. I want to stay here. So we don't mind losing a little bit of money on these trials, but we also can't let people abuse them and just do free trials forever or do $20 trials forever because we're just coming out of pocket. So you're welcome to do the 2-week trial for $20. We obviously do crack down on people who are abusing it, and we tell you, listen, you can sign up. Here's the links to sign up, but you're banned from doing repeated trials because it just costs us money and it's not fair. If you want to be a member, you could be a member. Anyways, so with all that said, if you want to watch over my shoulder this week, you can do a 2-week trial. It's $20, and then you can actually watch me go through this process each morning of creating my watch list. Now, I know there was also a comment, Ross, what about the morning show? You did the morning show during the pandemic. That was great. Are you going to bring that back? So you're right that I did the morning show during the pandemic, and I did that at the beginning of the pandemic. Essentially, we were all in lockdown, and I was like, I'm just going to turn on this live stream and give you guys my watch list and kind of walk you through what I'm doing each day. However, I don't plan on doing the morning show. At this point, I'm putting my focus each day. First focus is managing my account, trading my account, because I'm a full-time trader. My second focus is giving my attention and priority to paying members at Warrior Trading. And I just don't feel that I can divide my attention by also keeping an eye and maintaining a YouTube stream while I'm trying to do all that. Something's got to give. And so the YouTube stream is kind of what's giving. But I understand that that's not what everyone wants to hear, but that's just the reality that it's too much for me to do that. So, for me, I had this goal of performing at a high level this year, and I need to make sure that I'm able to focus, number one, on finding the best stocks to trade each day, and then executing on those trades while at the same time giving my real-time commentary to members in the community. So I hope you guys understand that. All right, so MLGO, I will not trade this one on Monday. I don't have any interest in touching it. This stock is dead to me, but I think it's very possible that because traders are going to think, oh, the last stock that made this huge move was from China, that this is sort of the bonus, that the next stock from China that starts to pop up, if we have a stock on the scans on Monday morning that meets all of these criteria and is a Chinese company, what are traders going to think? Pattern recognition. We're going to be like, this looks like MLGO from Friday. Now, if you say something looks like MLGO for Friday, I'm going to think, I don't know, that's almost a little scary. It's going to bring back a little trauma from, my mistake. So because it wasn't super easy to trade, I don't know if that next China stock really will go, but it's something to pay attention to. There's a good chance that it'll get at least a little bit more attention just because of the, this recent move. But we also last week had a number of OSRH, a number of recent IPOs. We got this recent IPO breakout on OSRH. This was a big win on Wednesday, and it actually gave me another $17,000 on Friday. It's the only reason I didn't finish the day red. So this was on Wednesday, pulled back, popped up, squeezed up here, and then came up again on Friday. So a nice move there from $3.89 to $7. That was just a daily setup. AIFF. This one's also been on the watch list. We got a little bit of a pop here on Friday as well, from about 740 up to 9. Unfortunately, what we were dealing with a little bit on Friday was dispersed attention. Now, AIFF was also an example of a stock that was sort of the day 2 IPO, big move. And then we did end up getting day 2, day 3, a little bit of continuation, but you could see the volume sort of declined. I mean, it's pretty good here, but it sort of declined, and the stock became more difficult to trade. So usually the first day is the best. Second day, we can work with second day, but there's some variables there, and it's usually not as clean as the first day. So another thing to keep an eye on for this week. So we've got those criteria, but then our kind of bonus things to look out for would be a China stock, recent IPO or SPAC merger. So a special acquisition company that merges is kind of like an IPO. So that's something I will also pay attention to and look out for. And then I would say, just generally speaking, if we pull up the continuation scanner here, a lot of the stocks that gave us some big moves were just very low floats. So float under, let's say, 1 million shares. So I really think the watch list at this point is more of the game plan. Like, this is the way I approach sitting down each day. When we have a stock like an AIFF that's going, multiple days in a row, then it's like, yeah, I'll probably be watching that on, the next day. But I mean, so while some people might watch MLGO on Monday, I don't care for it, obviously. So we just don't have anything that was like so strong that I feel like we should really be paying attention to. SLDB, daily chart, I just don't think it's probably going to work. There's some cheaper ones. SINT, this one I thought looked great on the daily for this sort of continuation, but it didn't have a catalyst, and it wasn't one of the top leading gainers. So that was its main problem. It wasn't obvious enough. So even though it looked fine, traders weren't paying attention to it. There were other things that were better. And that can be a little confusing because during a colder market, some of those setups might have worked because nothing else was good. Nothing else was looking good. So it was like, this is the best of what's around. But in a hotter market, you could be a little bit pickier in a sense. I mean, and some of the stocks that might have gone when it was colder on a day like yesterday, just there's not enough people watching them. So, that's kind of my approach. Now, I also got a number of comments about this broker comparison sheet that I've been working on. So I've got a number of videos that are coming out, platform demos and things like that. This is kind of where things are sitting right now, the way I'm ranking these different brokers. You guys know I use Lightspeed, and I'll just tell you right now, I have no affiliate relationship with any of these brokers. So I'm not getting paid to tell you that this is a good broker. It makes no difference to me. I'm just sharing with you, in my experience, based on my strategy and the way I trade, how I would rank these brokers. Which ones essentially I would use first, and then which ones, get the lower rating I would be less inclined to use. So the things I like about Lightspeed naturally is super fast order execution. Now, yes, I pay commissions, but I'm willing to pay for speed. Guardian, Centerpoint Canada, Cobra, CMEG, Ocean One, Trade Zero International. These, for the most part, are all going to be fairly comparable in speed. CMEG orders sometimes would lag because it's a smart route. But the rest of these are going to be really fast. Ocean One, people have been giving really, good feedback on that. And then you've sort of got all the commission-free brokers. So I think Charles Schwab with Dash Trader at this point is sort of the best bet for commission free. I did this episode that some of you guys maybe have checked out, is Think or Swim worth it for day trading? And at the end, I said, I think the best bet of using Think or Swim with day trading is to pair it with Dash Trader, this software right here. So that's my full Dash Trader demo that you guys could check out. And I would make the same recommendation with Interactive Brokers. Interactive Brokers to me is really only worth it if you're using it with Dash Trader. But some have also asked about this Rule 144 at Interactive Brokers, which is why they are, instead of an 8, I said would be an 8 without Rule 144. So Rule 144 states that if you're an affiliate of a company, you're restricted on, there's restrictions on how much stock you can sell. And the restriction is that during a 3-month period, you can't sell more than 1% of the outstanding shares or more than 1% of the average volume over the last 4 weeks. The problem with that second one is that, well, there's 2 problems. The problem with the second one is that we're often trading stocks where the average 4-week volume could be very low, but the volume today is very high. MLGO, just as for example, it traded on 1 million shares just a couple days ago and then trades 500 million shares. So if the average volume, well, in this case, let's just say the average volume is 1 million shares. 1 million shares a day. So what's 1% of 1 million shares? Well, 10% would be 100,000 shares. So 1% would be 10,000 shares. So if you bought and sold 10,000 shares of this, you could get that 144 trigger that you're trading more than 1% of the 4-week average volume. And so the issue with Interactive Brokers is that this rule places certain restrictions on affiliates of the issuer. And so they err on the side of caution and assume that every customer is an affiliate. So if you try to sell more than 1% of the float or more than 1% of the 4-week volume, they're going to say that you're going to trigger Rule 144 if you're an affiliate. So please confirm for us that you're not an affiliate. And now you're tied up in their compliance department for hours trying to get them to unlock your order so you can actually sell it. And you can't sell until they've passed you through. So this is not a problem if you're trading large cap stocks. You know, it's not a problem if you're trading futures or Forex or ETFs, stuff like that. But it can be a problem with small caps. And a lot of people have reported that. So if they change their stance on that, then Interactive Brokers would go from being a 4.9 to being an 8. And that would jump them way up to kind of like right here. Or, well, actually, it'd be right here. It's somewhere in that area. Anyway, so the way I compare these brokers is I look at a couple key points. The most important for me are these ones down here. Level 2, hotkeys, offsets, the ability to sell by percentage of position, and seeing halt levels and halt resumptions. And these ones all have it, but there's a few over here that are lower on the list that don't have it. So, you know, you can take a look at this table. It's a work in progress because, you know, as I go through and do a review, I adjust things, or every now and then someone will say, hey, you actually got that one thing wrong, and I go and check it and I update that. So anyways, just something to be, just something I thought I'd share with you. So as I continue doing these platform demos, and I have more coming out soon, you'll see this doc during those demos. But if there is a platform that you want me to do a demo of, please, by all means, let me know, and I can add that to my list. So anyways, I just wanted to share that with you because I saw some comments about it on my last upload. Okay, so watch list, game plan for Monday morning. This is the profile with special emphasis on stocks that are possibly Chinese, recent IPO, SPAC mergers, or floats of under 1 million shares. And as always, of course, biotech stocks. Okay, so that's the watch list game plan for Monday. And if you want to do that 2-week trial, I'll post the link in the top of the comments and in the description so you can check out the 2-week trial here at Worry Trading. Join us. It's $20. I think you'll have a great time. And I'm looking forward to seeing you guys bright and early Monday morning. I will be live streaming just before 7 a.m. And hopefully we've got a nice looking gap scanner, a couple stocks that are up 40, 50, 75%. And we've got something we can jump on right away, 7 a.m., top of the hour. All right, thanks as always for tuning in. Reminder, trading is risky. My results aren't typical. Those of you guys who have been tuning in for a while, I hope you hit the thumbs up, and I hope you are subscribed to the channel. And by the way, my 2024 audit is now live. So this carries through December 31st, 2024. All of 2024's profit is right here. Started the year with $110,000, finished with $1.8 million net of fees and commissions. So I've now turned $583 into $12.6 million. It's pretty impressive, but my results aren't typical. So please take it slow, and I'll see you guys bright and early on Monday morning.